probably the second one we have this year, the second Rowad talk that we have this year. And we have actually a very, very special guest with us that we've been trying to get, and he's usually very busy, so we're very lucky because this is the only day in the whole entire year before 2020 that he was available to come speak to us. I understand that there's another event today that's happening that we just found out about, but this is a better one, by the way. So if I can just ask everybody to come and potentially like fill up the first row seats, if you could. So for those of you who don't know me, I'm Erij, and I work with the Bahrain Development Bank and manage the development services out of the bank, which is mostly the entrepreneur support platform, the Rowad program, and which embodies a lot of these types of events that we run throughout the year. I'm not going to talk a lot more about our special guests. I usually moderate this, so the ones who usually come to these events, but today I have to step down because we have a better moderator. So a lot of you have seen Danny Farha. He's the managing director and one of the founders of Beko Capital, which is one of the top regional venture capital fund of funds. And they are also an investor in Kitopi. And so Danny knows Mo from quite a long time, so he can also add flavor to all of this. Both of them are also very good friends. And without further ado, I'll have Danny and Mo come to the stage.
Hello. All right. Who doesn't know Arij? Put your hand up. I dare you. For those of you who don't know me. Okay. Let's start maybe with a quick show of hands. Entrepreneurs in the house, hands up. Awesome. This is live stream. Okay. Investors. I like it. We have two hats. You put your hand up no matter what. Okay. All right. Are there any burning topics that you guys would like to have covered here in this talk? If there are, just put your hand up. I like it. Please.
Nawaf Kohaji from the BCCI Food Committee as well. So my main concern is that how did you go around the legalization and the whole formation of your company in the UAE? Because in Bahrain we have several routes that or restrictions that we can operate in terms of food. So how did you manage to get the approvals of the health ministry and do all of that?
Regulation.
Yeah, so regulation basically.
Okay. Any other headlines?
So I was about to start the same. I wanted to do the same concept in Bahrain. The only thing, as Nawaf said, was the regulations. I want to understand more about it. I want to understand how you is it. Do you need a big market for it to work, or is a small market fine as well? And is it feasible? Does it require large investment and all of that? Yeah.
Okay. And then on the entrepreneurs in the house, is everyone here doing tech entrepreneurship, startups? Yeah? Okay. Anyone in food tech?
More tech.
Sorry?
Technical, more tech.
Okay. All right. So here's what we're going to do. We're going to have a conversation with Mo, and we're going to try and bring out some of the things that you both talked about. Happy to take questions as we're having this conversation. I think when we discussed on our flight over here what success would look like, and we discussed this earlier with, I think, Lamis, if you know, just one thing that we say in this conversation can be taken on board by one person in the room, that can walk away and think, oh my God, I'm inspired. I see something differently, and I'm going to pivot my business or run it in a different way, or have a different mindset, or maybe quit what I'm doing and, I don't know, go find a job. I don't know. But if we can cause someone in the room to take action and be inspired, then that would be what we would define to be success. So,
sorry, I told you I'm going to bug you from here.
We like
but
you
have to but you have to tell them how you basically the first time Mo came and spoke to you. You need to include that in the conversation.
So let's try and do this chronologically. Maybe what I'll do is, Mo, if you can tell everyone a little bit about who you are, and then how you got up until our first conversation, not our first conversation ever, our first conversation about what is now Kitopi.
So, born and raised in Dubai, so I'd like to think I'm Emirati at heart, or Khaliji at heart. When I first graduated from university, I studied maths, and I thought I'm going to be a banker. And thank God I wasn't a banker. And I started off by entering the confectionery space. So I built and sold a business called BDB, which today is the largest confectionery manufacturer in the Middle East. We were white labeling chocolate for the likes of Starbucks and Walmart and over 1,000 retailers. And I learned a lot about automation, and I learned a lot about building businesses at scale. We were in 32 markets. And I fundamentally learned a lot about what not to do to scale a business as well. And particularly when it comes down to building teams, hiring really senior staff. So I was 21 when I founded it, so I was pretty young and without much experience. So
He's still very young.
So I built that out, sold that business, and came to Danny and said, Danny, I can retire now, but I want to invest. I'd be an investor. That probably lasted a week. I'm a horrible investor. And so every single investment I've made failed, just for the record. And then I decided I was about to invest in a particular restaurant. And that restaurant today, so that's one of our clients, a brand called Right Bite. And I realized there's a couple of challenges in the food space. One is it costs a lot to build it. Right? So each store, you have to build a CapEx. Second is you have to actually manage staff and hire staff and operate the unit. And beyond the CapEx, the OpEx, right? It takes a long time to turn this profitable, and to do it at scale was going to be a nightmare. So with my white label hat back on, I was like, why isn't there no platform that allows a restaurant out of Bahrain to plug into this platform and go live anywhere in the world, right? So you see that in multiple other verticals that exists, but within food it doesn't. So this is kind of where the inspiration first started. And went to Danny. You wanna?
Yeah, so maybe I'll jump in, I'll back up. So Mo and his brother founded this company called BDB, which basically, as he said, white labels chocolate for many brands, Pachi and so on and so forth. And they were exporting and selling into the UK and the US. Now, I'm a mentor in the Endeavor group. He was an Endeavor company as BDB, and we met at an annual, I think the annual dinner, 4 or 5 years ago. And the minute I met Mohamed and his brother Bilal, you just knew that these were special people that I was drawn to instantly. I remember actually leaving you guys after speaking to them for about 40 minutes, thinking, listen, I have to go. I can't believe that there are two guys that have built a 300 million dirham top-line business in 7-8 years in Dubai, headquartered out of Jebel Ali Free Zone, in an FMCG business that I was formerly had a catering business, so I knew a lot about the catering space, and I've never heard of you guys. And they've bootstrapped, and they didn't take a single dime of funding, which was really cool. And then we went from that to basically getting to know each other and spending time talking about their business. And then, as Mo said, when he exited the business, we had a couple of conversations. One of them was about Mohamed retiring, which I thought was crazy. And then he basically came over for lunch in the office and said, hey, I used to white label chocolate for many brands. I want to white label food delivery. And you can imagine, for this, the first time I ever heard this concept, I was like, seriously, bro? What a strange concept. Anyway, I think the interesting part of the message that we can give this audience, and any audience, to be honest with you, vis-a-vis this conversation, was us having this conversation about white labeling food delivery, which for me, it sounded absurd. I didn't understand it. To then thinking, okay, this guy is being serious. He had the look of seriousness in his eyes. And it wasn't just a joke. And then we just started discussing what that would look like and what we would like about the business, and what, from our perspective as a tech investor, what we didn't like about the business. And as I'm sure you can imagine, the things that would cause concern is, my God, you'd need kitchens all over the country, and if you want to build a global business, you need kitchens all over the world. That's a lot of CapEx. And we're tech investors, and we like to invest our money in people and in payroll and IP and technology, and obviously you have to put some money into CapEx, but I mean, it's the other way around. And so we discussed the macro and the micro of food delivery globally, and the fact that people were dining in far less, and it's just continuing to fall off the cliff, dine in, and people are ordering far more out, and obviously the on-demand economy is taking over, and logistics and last mile, but yeah, no one's doing food delivery for restaurants that might want to plug into the Kitopi network and suddenly be able to sell in Saudi and New York and LA and China and London. And so we had a conversation, and Mo came back after a month solving for the CapEx issue. Maybe you talk about that.
So I think a key point here is, on repivoting, which is something I guess me and my partners are pretty good at. We're taking an idea and in a very fast way, flipping what we wanted to do to something much more scalable. So I think we were pretty lucky to have Danny mentor us, and a couple of other people kind of tell us what not to do, and we quickly moved it from an asset-heavy model to an asset-light model through multiple means. So we actually don't own any of the kitchens. We just lease our kitchens. I'm giving you ideas now for your startup. So first key point was, how do we turn this into an asset-light model that we can scale up very fast? And went back to Danny, said, this is our model. Do you like it? And I think by then you still didn't like it. But we did it anyway, and
no, I think that's a good point. No, you solved for it beautifully by thinking about setting up off-balance sheet financial vehicles to still have an asset-light business. So it was great to see Mo go from that to this to where we are today, and I think it's also just great fortune, the fact that the world seems to be building lots of cloud kitchens and dark kitchens across the globe. Okay.
So to you guys who still don't know what we do, so the model is pretty straightforward. We cook and deliver food on behalf of brands. So you could be a brand anywhere in the world. You can be in London or New York or Bahrain, and you plug into Kitopi, and then suddenly within 14 days, you go live in any kitchen we're in. So we're live in Dubai, Abu Dhabi, Kuwait, Riyadh, London, New York, and then it gives the brands the opportunity to really have, very fast scale, great profitability, and not have to worry about managing the complexity of the operation globally. The way we look at it is, if you look, if you go back 10 years and look at the restaurant space then, and if as a consumer you were to order food, you'd probably order from like a Chinese takeaway or a pizza company. And then 5 years ago, Uber Eats and all the competitors came to light and came and said, we're going to give you restaurants incremental revenue, and we're going to plug in your logistics. And consumers loved it because they now got access to all these restaurants that they didn't have. And then if you fast forward down to 2 years ago, most of these restaurants who loved, accessing all this new stream of revenue started hating it, because now it no longer was 10% of the revenue, it was the majority of the revenue. And no restaurant was making a 30% net margin, and that's exactly how much you have to pay out aggregators. So I think if you look at that model and compare it to other e-commerce verticals such as beauty, fashion, etc., this is exactly what happened there, right? So third-party fulfillment was a key component to really help activate other e-commerce verticals, but third-party fulfillment is not active in food. So we thought we're the third-party fulfillment service that we want to provide. So that's the model.
Just a point of clarification. What are the names of the restaurants what restaurants are we talking about?
So when we first started, it was pretty much small local players. Obviously, for people to trust in a new model to give us the recipes and operate took some time. We're 20 months old, so we're relatively young. 6 months after, we built a good track record. We built multiple sites. We started seeing network effects kick in, and we signed up very strong local brands. So in every strong category of food, every strong menu type in food, we probably have 3 of the top 5 players. So depending on the market you're in, we'd have, so if you live in Dubai or Abu Dhabi or Kuwait or Riyadh, or I can close to guarantee we've been feeding you without you knowing it, and we white label all our service. So as a consumer, you would never know that Kitopi exists, and we choose to be out of the radar and let our brands shine. So we're a proper platform play, and so if you go to kitopi.com and check our brands, we'll probably have the 115 brands up there.
Whoa, it's really loud, and it doesn't work now. Okay, so follow up to that question. So basically, brand restaurant X would give you their wrapping paper and their packaging, and then you cook it and put it in their packaging for delivery. That's what you're saying?
Yeah. So we actually source the packaging and the wrapping paper based on their specs, and we would go from sourcing their specified ingredients to producing their food and integrating with all the aggregators and last mile players to deliver.
So that's restaurant X. Now restaurant Y, you're doing all their cooking, or they have their outlets and you're doing the extra cooking?
So we have multiple versions of the model, right? So if you have 5 locations serving a part of town, you're not serving another part of town, you'd outsource to us. If you're not in a particular city, you'd outsource to us. But more important, we realize the model shift now.
I'm in the front row. I can hear you.
So the model is shifted to instead of us just telling you we can go take you from A to B, what most restaurants are figuring out is they cannot actually be profitable in their existing location on food delivery. So they're shutting down their food delivery component, or actually their entire restaurant, and we're taking over even in territories they exist, as that's a much more profitable model for them.
Delivery.
For now.
For now, yeah. That's the disruption that's happening in the restaurant space.
As you serve multiple restaurants from a centralized kitchen, how do you deal with the confidentiality and the rights over the recipes? How do you...
Yeah, so given that we are the ones cooking the food, that solves a lot of the problem, right? So we're not, if the brands were cooking the food in our kitchens, that might be an issue. That's why we don't let any brands in. So the way we operate is we have obviously very strict agreements between the brands and us and our employees to manage a lot of the IP.
Yeah.
And so given that we control the cooking process, we're able to manage confidentiality.
And it has to sort of achieve certain standards.
Yeah, so we have a pretty strict onboarding process of how we onboard. We have multiple layers of audit that happen, so we have a whole team. So we have a team called the Academy, and the Academy, their KPIs are very much linked to product consistency, et cetera. So that's a big topic within Kitopi, and I think that the fact that we're over 100 brands now is a sign that we've been able to create consistency on a global level, but definitely something we're continuously building software around to not only manually observe this, but also at scale, how do we manage consistency and measure?
On the real estate side, who owns the
kitchens, and how does that work as a real estate play?
So it depends on, again, every city has different ways that we manage our real estate challenge. So in some cities you have cloud kitchen providers who we lease space from, such as cloud kitchens and others. In some cities, we actually have restaurants convert the restaurant to us and then lease out their space to us. In some other cities, we have a PropCo model. So we have off-balance sheet investors who invest and we lease them. So it's work in progress, and we're obviously building multiple ways to build future supply. Also, as we have a couple of investors on our cap table who enjoy the real estate play and build up kitchens for us as well. So that could be spin up as a fund of some sort.
Yeah, you could have a lease co like Uber and Kareem, where they first started going out recruiting drivers on a one-on-one basis, and then they went wholesale, and then they started coming up with lease co programs where if you are a driver and you put your car in the platform of Uber, they will in turn guarantee you a certain offtake, and so you're able to get financing and so on and so forth. Yeah, same equivalent. But just back to your question on confidentiality and all of that stuff. The secret sauce is actually in the supply chain. So if you want to go and you want to copy Burger King, you need to know the entire supply chain, where they buy from, and what it goes through until it arrives as a patty. And I'm just giving you a patty of one of 15 items that could go to make a Whopper, right? That's the magic. It's not, to get that Whopper is actually very, very difficult from the supply chain, from point A to point Z. So it's not necessarily what happens in the kitchen. It's what happens before the kitchen.
Sorry, I was just going to say that I felt that maybe we kind of jumped, so maybe for the people who don't know Kitopi, maybe you can do like your 5-minute pitch of like what it actually does, and then that might help the people who don't know what you do a little bit. Yeah.
I thought I did that, but anyway, maybe I'll give it another shot just in case. So yeah.
Can I give a quick shot before you give a shot? Who knows Shopify?
Yeah, I wish Amir was here, he'd kick him off soon.
No, okay, I think you want to give the Shopify
example.
example.
Danny, I insist.
No, go on.
No.
Guys, you know Shopify. Everyone knows Shopify here, right? If you want to set up an online store, ultimately you can plug into Shopify's infrastructure. It'll give you a website, it'll give you an Android, an iOS app, and it'll give you an existence online. It will then give you payment solutions locally, globally, internationally, because they're just a box. They go and they negotiate all those payment options with all the different providers. And then if I want to sell Arwa water to someone in Germany, not that they will want to buy it, but let's just go with that example, and I am a Shopify customer and they give me a website and I say, come buy my Arwa water from Bahrain and I'll ship it to you in Germany, Shopify transacts on my behalf, does the payment with other payment third-party providers, but I only know Shopify. It's dealing with the 3PL, third-party logistics interface with all of these different providers. And then it also ships the bottle of Arwa all the way to Germany in the packaging of Danny's packaging. It's different to Amazon, right? Amazon does the same, but Amazon will ship you an Amazon box. And Amazon owns the customer journey and the branding, etc. So it's a very, very different proposition to Shopify. Merchants that want to come online love the ability to do this with Shopify because they control their own brand. Same for food. Over to you.
Yeah, so it's definitely a very similar comparable to other e-commerce verticals. So we are creating third-party fulfillment model for the food space. In simple format, you're a brand in Bahrain, you want to expand in 2 weeks. So by the 20th of October, you want to go live in Dubai or London or New York, talk to us, and 20th you go live. That's the simple version of what we do. Think of it as franchising 2.0. Right, so you're franchising your brand out to us, we're taking it live globally.
Without having to put a dime down, which is pretty cool.
How the startups come into the picture? How the startups come into the picture? You have big brands and maybe 100 brands, but a startup is just a new. The brand may not be even popular, but the demand is there in that particular segment or particular category of food. So how that will come into picture?
So if your question is, how does a startup brand work with Kitopi?
Yes.
Yeah, so we've built software around brand selection, and it's moved away from, we used to have a committee to decide what kind of brands we want to onboard, and now this is driven by software. So we would look at your brand and determine, is this a brand that we can replicate and cook? Should we cook it? Is it a brand that beyond that, can we cook it? Then there's, should we cook it? Is it going to create good financial returns for us and for you? And then the third question is, where do we cook it, right? So we really go look at our utilization data coming out of all of our kitchens and map out exactly if we have the right supply side to manage your brand. Generally speaking, it's tougher for a newer brand to join our platform, given they need larger capital, etc., to make that happen. So we typically would go for brands that already exist, or maybe a startup brand, but as part of a larger group that already has multiple other brands who understand how to capture, so it's a digital play, right? So on the food delivery side, you're not interacting with the consumer directly. So you do have to understand how to market your product digitally. And so typically you see startups are not the most efficient in doing so, but we do have exceptions.
Question at the back.
Hi, thanks for your talk. I just had a question, one question to Mo and one for Danny. Mo, my question is, what's the logic behind moving to New York and London? I would imagine at over 100 square meters, you would start having diseconomies of scale, which you would not really have in this part of the region, in addition to being located in central metropolitan areas. So how do you sort of justify that in your whole business plan? And Danny, my question to you is, you mentioned part of Biko Capital's sort of assessment and criteria is IP. Mo explained a little bit about some of that software selection. What is the IP you're seeing in this play? Those are my questions.
So look, we've gone through this point. We just closed a Series B round now, and we've gone through, tackling with our investors why New York, maybe 80 times. So the short version of my answer is why not, right? So it's a global play. We have massive ambition. We're already doing the Middle East, so we're in most markets that matter, and expanding even to others. So we really passionately wanted coming to Bahrain, hopefully soon. And I think there's a couple of points here. One is when we're assessing a market, we're not looking at it from a geographical challenge. We don't see economies of scale. I mean, if you look at getting into Saudi Arabia or UAE, they're two completely different markets that it's not a free trade zone logic, right? So getting into Bahrain or getting into London would require the same resource internally for us. And London has a much better outcome to us than a market like Oman, for example. I shouldn't say Bahrain. So my point here is when assessing a market, we look at the depth and density of the market, the economics that we get back. So that we have like over 80 different metrics that we looked at when determining is the US the right market or no. And then US was very high on the list, and particularly cities within the US. So not just say all the US, but particular cities within the US were pretty high on that list. And having a very mature online aggregating market is important for us because we don't have to worry about customer acquisition, right? So we plug into local demand on day one. So that was also something where the US was pretty high on. So that's why the US. And I was sitting on a panel in China a couple months ago, and I got asked this question from a Chinese gentleman, and he said, because we're also planning to get into China, and he's like, so how is an Arab getting into China? And they felt pretty shocked that we'd be the first Arab company that actually enters China and hopefully succeeds. And I think it's something as coming out of this part of the world, we should look. Again, I got another question by one of our potential investors who asked us, why did this idea not get created in the US? Like they're shocked that an Arab company or Arab founders created this idea. And I think that it's about time that we start exporting ideas out to the rest of the world versus just importing. And the way we look at the world is a little, we have a global lens to it. And it's not binary. Doing in New York doesn't mean we don't do it here.
Let me just, I'm going to answer your question, but I just want to round that out. And this is my perspective, so it's not Mo's perspective. It's nice that you hear different perspectives. I like the fact that he said, why not? Because when Mo first came to me and said, hey, I want to go to the States, my initial reaction was, whew, the States. Let's talk about that. And then when you go through the intellectual discussion about why you would even consider that, it becomes actually very, very appealing. And let me give you my summary. My summary is, this is a white space, right? This is not being done anywhere in the world. I mean, if it is, we don't know about it, and it's probably very small. Most people are building infrastructure, cloud kitchens, dark kitchens, ghost kitchens, whatever you want to call them. They're pretty much the same thing, right? Infrastructure plays, come, Mo, rent this place, or go and ask the brands to rent them. And others are building their own brands. No one's doing it for other brands. I'm sure it'll come. But if it's a white space and you have the capability from a founder of this caliber and his founding team to actually export business model innovation to the mother of all markets, which is America, before anyone else does, why not? It would be nuts actually not to do it. You know, I would prefer to do it and learn a ton in the process and then come up against competition, even if it's not the best outcome, than to tell myself that we've never actually tried and I just have no idea what it would be like not to have been there.
So just to add on that point as well, since it's an open...
You're getting us sitting on the edge of our chair now. We're getting all competitive here now.
So another point, and this is, I guess, something to the investors in this world, in this part of the world that should focus on. I mean, access to capital is a big challenge, right? So we've raised collectively $90 million in 20 months. And I think that...
Say it again. 90. 90.
And the challenge you have is in this part of the world, we've probably tapped out. Like, that's it. There's no more venture capital money. And I was just challenging Arij and saying, why didn't BDB or Wahafan invest in us, right? So the fact is, this is kind of where it ends for us in accessing capital. And do you think we'll access more capital being just in Saudi? And so one of the things that we need to really be conscious of is, if we want to continue to scale this up, we probably technically, if we didn't have the pressure of time, probably doubling down on Saudi Arabia would have made more sense. But the reality is, 2 years from now or 18 months from now, we probably need to raise another round. And raising that round just meant further access to capital, meant we need to tap into international markets. And that's unfortunately one of the reasons that expedited, beyond the first mover advantage, expedited the need for us to be in the US.
Unfortunately, because we have the money right here in the region, but unfortunately in this domain, we don't have the experience nor the conviction to write those very big checks.
So I just wanted to clarify my question. I mean, more power to you guys. I hope you raise more money. I hope you dominate the entire world and the whole galaxy. That's not really like the angle I was trying to address. My understanding and my question was...
Unit economics?
Yes, I did. Is that at over a certain size of your kitchen, there could be economies of scale or diseconomies of scale. My question was, based in the GCC, that average spend on delivery is 1 to 3x of what you would find in major metropolises in like London or New York. Why would you pursue those markets where you get diseconomies of scale over a certain size? And the question is that is different to your business model, as I understand it, where you have larger kitchens and fewer of them rather than many smaller ones. And therefore, why would you not pursue other big markets that are not New York and London? So for example, Lahore, Shanghai, other large markets. For me, the business model, and that's the question I'm asking, is why those markets? Because it's contrary to your business model, in my understanding. So that's what the question is. That's kind of what I meant. And again, more power to you guys.
So again, looking back at when we looked at markets, we didn't say we want to get into New York, right? So when we looked at markets, we assessed a lot of markets in different parts of the world. Ease of doing business is a big component, right? So Lahore is not a market where it's easy to do business, whether from a language perspective, cuisine type perspective, right? Pretty much centered around a couple of cuisines versus more diverse cuisine base. And beyond that, it's just looking at average order value and economics overall, right? So the average order value in markets like London and the US are 30% higher than, you know, Saudi Arabia or Bahrain or even UAE for that matter. So looking at economics, looking at ease of doing business, looking at density and depth, I mean, we'll be able to build 50 kitchens in New York. You know, 20 kitchens in the UAE, we're tapping out the market now, right? We're saturating. So being able to build density and depth allows us to then build economies of scale. You know, we have a hub and spoke model, so the more number of satellites we can build around the hub means our economics work much, much, much better. So for those reasons, markets that are much larger, but also have the right unit economics, like the right average order value, there's a lot of density and depth in the market, so it's not where you have to drive, you know, an hour to deliver food, make a lot of sense for us.
So I guess the assumptions that I think you made were large kitchen versus many small kitchens, and they operate a hub and spoke. So there is a central kitchen, but there are lots of small kitchens that have very, very high capacity utilization that give them a very large geographic coverage. And that is that has economies of scale, not diseconomies of scale working for it. And the US, I mean, highest basket size, and I think even frequency of purchase for food delivery in the world. Now, to your question on IP. So I guess what I meant with the blanket comment was that we typically don't like to invest and shouldn't be investing in hard assets, in CapEx. That's not what we're here to do. We do, but it should be a very small proportion of the use of proceeds. We should be investing in people and technology and IP. And IP means building cool software that you know is difficult to build and difficult to replicate. Now, in this case, because they're innovating, right? It's not as though you can go and like franchise this business because it didn't exist before this gentleman decided to build it. You can't go and just license software off the shelf that does all of what these guys are doing. They have built an incredibly deep technology stack from A to Z across the entire supply chain, right? From procurement to supply chain all the way down to last mile and everything else in between. That is, without going into too much detail, there's a tremendous amount of IP. I will say this though, that when we first invested in Mo and Kitopi, there was very little technology, right? We went on the premise that we trust this gentleman to iterate very, very quickly and continuously evolve his thinking to build out a very, very exciting bit of IP, and that's the entire tech stack in between. That is very, very difficult to, not impossible, nothing's impossible. You can replicate the Google algorithm, even though it's a couple of pages worth of mathematical equations that I don't understand. So there's a lot of trust and faith and just having these honest conversations with each other saying, here's how we're gonna take over the world. Here's how we're gonna build a massive business that's really defensible, that has tremendous value for shareholders. And one of the big components is building out the very complex technology piece. If you build it out too early, because you're innovating, you could also be potentially building out and speccing out the wrong products and the wrong technologies along the entire value chain. So also building the right product at the right time and just getting that timing right is also very, 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 very complex. And the guys here have done a phenomenal job in doing that and continue to just evolve and iterate on the product. Yep.
I have a question, but please indulge me, it's a bit longish. Critics of VC valuation have used harsh words to describe it, including, and I'm quoting here, self-fulfilling, in light of public markets punishing unicorns such as Uber, Lyft, Slack Peloton, and most recently WeWork. My question is to you, Danny. How are you varying your investment and selection process in light of fundamental questions about valuations of VCs? And Mohamed, as a founder, are you reprioritizing profitability closer to scale up and growth in your journey?
So we're early stage investors, which means we invest at late seed, so just before the A and around the A, bellwethered around the A, right? So at the risk of sounding a little bit exuberant myself and maybe irresponsible, if you're investing $1 million to $2 million at the late seed pre-A and you get the valuation wrong by, $1 million or $2 or $3 or $4, it doesn't really matter in the grand scheme of things, right? If you build a company that's worth a few billions to many tens of billions, you could have left a lot of money on the table, but your outcome is so incredible that it doesn't really matter in the grand scheme of things. So from an early stage perspective, we really haven't seen much of an effect at the very, very early stage. These are seedlings, right? And in most of the cases, pre-revenue, there's no revenue multiple because there is no revenue. There certainly ain't an EBITDA multiple because there's no revenue, let alone EBITDA. So you're going with dilution. How much should you suffer, you being the founder or the existing shareholders, to raise 18 months of runway, typically? 15 to 25%, 20%, let's take an average midway point, 20%. That's about the right amount of dilution you should be suffering each round. Now, if you're Mark Zuckerberg building, Facebook in the early days, and you're Peter Thiel, and you see that this kid is special, and he's just got this crazy cohorts and crazy usage, and people are addicted to Facebook in the early days, then you give him $500,000 for $5 million pre-money, which only is 10% dilution rather than 20%. Because it's an incredible founder building something that's potentially massive, and it turned out to be, as you know, $700 billion market cap or thereabouts today. So that's on the early stage of the spectrum. On the companies that you mentioned, WeWork, I think, is a very special case. We were talking about it earlier before this session. But I'm personally intrigued by all of the conflicts that have come up in the S1 filing. I can't believe that those existed, that they would actually publish them in the S1 filing pre-IPO. It's crazy that an investment bank would publish that thinking that it would be okay. So leave that one aside. I can't comment. By the way, there's a great piece, and I'll share it with you when we're done, on the bull case and the bear case. And if you look at the bull case, even in WeWork, I sort of get why somebody could think it's worth 20, 30, 40 billion, whatever. You can make a case for the bull and the bear. Is the climate changing to be rewarding software companies generating 70% margins much more than technological opcos that maybe generate 40, 50% EBITDAs? Possibly. Is it because of what's happening in the public markets? Personally, I think Uber is a $100 stock in the next year and a half. So I'm very long Uber, and every time it dips below 30, I take more. Anyway, we're investors in Kareem, so we'll be very long Uber stock soon as well. But anyway, that's my perspective.
So I guess there was like the switch on for us. We were solving a lot for growth in the first 18 months, and profitability wasn't top of mind. And I think that two things happened. One, the investors that we got on this round, went through the WeWork, Uber kind of lifetime, and it was important to them, right? So unit economics and diving into every part of our P&L suddenly became so important, and it caught us off guard, which then brings me to my second point on how culturally, hired a phenomenal CFO. And while I still solve for growth myself, he solves for profitability. And a big part of our thinking across the culture of the organization now is really making sure that profitability is still top of mind now, while managing a really aggressive growth. So I think if anyone's fundraising now, this question will be asked a lot. investors, particularly on a larger check, will be looking for, I mean, at the bare minimum, excellent unit economics, and it's a harder climate to just, you know, wing it, you know, versus a couple of years ago.
But I do believe that if you are building an amazing company that's disrupting and is transformational and is global and is a white space, which means no one's really there yet, I think as a founder, you need to ask yourself the question, if you go slower, right, because you're optimizing for profitability, you're gonna leave the door open to someone else, or many other people possibly. And so I'm not saying that we should be completely irresponsible and just, you know, hemorrhage cash. Yeah, and I don't know what you did this, you're right. I don't know what the right balance is. I think actually, you know, bless him, I think I like the way Mo solves for it. Is my job, his job, is to solve for growth, while my CFO keeping me honest, solving for profitability and margins. Here's what I do say. If you can make a plausible argument, and I say plausible as in I believe you, and you can prove it, for example, in your older kitchens and your older, you know, the places you've been trading for maybe more than 6 months, maybe a year. If you can show profitability, let alone a path to profitability, you know, I for one as an investor would be very comfortable with that, getting the right balance between, okay, we know that if you want to be profitable, you can be. Now run, maybe don't break too much in your way, but if you don't get there quickly, you will give up that market to somebody else. And you know, the US is the one that everyone wants to win, because when you take that, you can take the rest of the world. It's much more difficult to go the other way.
So how do you compare Kitopi to Deliveroo's Edition or Roux kitchens?
Definitely not. I mean, look, if you think of the kitchen stack to have 3 layers, there's a lot of people building infrastructure. So Deliveroo Editions, cloud kitchens, Uber, I don't know Uber has kitchens, but if they do, Uber kitchens. So that's the infrastructure side, where we don't play in that space, right? So we're actually tenants to a lot of them on a global level. Then there's the operating space, which is what we play in, where we operate third-party brands in kitchens that we lease out. And then on the third part of the stack, there's the content play. So there's multiple players. It could be a brick-and-mortar restaurant, it could be a virtual brand, who just build content and license that to us. So that's how we see the stack, and each one of us are doing different things. I think the biggest risk is people who are trying to do the whole stack, who build the content, operate it, and you know, build their own kitchens. And typically, if you look at what's happening in the US, you know, they've constantly all failed.
Do you think the industry will consolidate? So you would go, people will integrate along the stack?
So that's typically what a restaurant is. Like a restaurant today owns the stack. You own the brand, you operate it, right? So I don't think it's with time. It's really that's how historically things have existed. I just think that's not efficient.
Sorry, I'm going to ask a question now. So when you say the sort of the content play, so I could, for example, create like recipes and create like my own sort of like restaurant without actually building a restaurant, and then license it out to you to just...
Yeah, so one of the interesting new products we're launching solves a lot for that, and we think this is typically something that will have a massive woman empowerment initiative linked to it. So think of it as Arij does great lasagna. Are you good in lasagnas, Arij? No? All right, imagine you do. Arij's lasagna wants to be sold globally. Instead of you doing it at home or just feeding your family with this great lasagna, imagine now you have a platform to plug in your recipe and then publish it globally. So we like to look at Kitopi as a publishing platform, not as just an operator of brands. Right? So initially we're publishing brands, we are evolving to publishing recipes. Okay, let's switch gears here. There's been a lot of talk about the business model itself and some great conversation. Who would like to talk fundraising? Okay, we're going to talk about fundraising. Is there any other topic that you guys want to talk about?
We tackled the regulation discussion.
Okay.
So, so look, it depends what you're trying to build. So what will help me understand is when you say you were trying to build something similar, given how I explained what we do, is it still similar, or are you looking at more the infrastructure side?
It's similar. You are smarter. You thought about everything from A to Z. Like there were a lot of missing things for me,
Great.
which you clarified.
So my
But
partners are gonna hate me for fueling competition now.
No, not really. Bahrain is a really small market. We have.
It's great that the ecosystem is building. It's not a winner-takes-all market, so I think that we definitely can have a lot of learnings, and we can support. If you have aspirations to do this. So, but yeah, I think regulation is pretty clear. It's a restaurant platform, so we're not doing anything that goes against any particular regulation. So think of it as a restaurant license.
Okay, how do you operate in different countries? That's what I like, because the health regulations in Bahrain alone are crazy for a restaurant. So
that's exactly why we tell brands, don't worry about operating your brand, license it to us, because it's very complex, and every country needs a whole different approach to how we operate it. But
okay, for example, Bahrain doesn't have centralized kitchens where you guys are renting out. So how would you operate? Would you build the centralized kitchens? And Bahrain's real estate market is pretty expensive. So how would you go? Like, I'm pretty sure New York and London are more expensive, but I'm just talking about, like, when it comes to a market, we're very expensive and we're very small as an island and a consumer base. So how do you tackle that?
So I think I guess it depends on what stage of business you're in. Maybe in your stage, I would recommend you actually build it, because you're not going to find much people who are going to build it for you, given you don't have a track record of building a lot of kitchens. But typically, we know a lot of investors who enjoy investing in real estate, and it's a real estate play. So and we have built up, a massive army of them who love building out kitchens, and we love leasing out kitchens, and that's kind of the summary of how it works.
Okay. So my question is, if you decided to come to Bahrain, where a centralized
kitchen... We're going to come. We're coming.
So when... Oh, so when you come to Bahrain, now we don't have rules and regulations when it comes to centralized kitchens. Like, if you want to open one, I thought about also doing that. So when I approach the government, how are you going to tackle all of that? Do you go to the government and go like, okay, so we have this idea, and how?
So I guess going back again, I know people in the crowd probably have restaurants here, and some of them have virtual brands and multiple brands in their restaurants. So it's the same logic, right? Except you're now franchising these brands out. So, I mean, I don't know really how to answer that question, but just to go say, you have a restaurant license that is able to cook food. I mean, what the government really cares for is, do you have the right license to cook food in a very safe way? And if you do have that license, depending on the city you're in, the different licenses, you can then, whether it's your brand, someone else's brand, I think the government doesn't really care. I think what the government really cares about is, are you going to make sure that everyone eats safely?
So basically in Bahrain, if you come, so I have a catering company, then I go to you guys and tell you, can you cook on my behalf and deliver it? Yeah, so how do you, like the health and also the ministry and the not the regulation bit, but the Ministry of Industry and Commerce see our situation. And I have contracts with schools and universities, so are they going to do the contract through your CR or my CR?
Yeah, so it depends. If we're the ones cooking the food, then it'll be with us. And then we would license your brand out and give you guys,
So, for example, Kitopi Bahrain signs the contract with the school.
Exactly.
But under the brand of X.
Yeah. So I think from a government perspective, they don't really care what brand you're using. They care about where's the food being cooked. Let's audit that facility. Let's have traceability into that site.
Okay, cool. Now I get it.
Yeah, see, you are taking IT software analytics and data mining, right? So based on this, after analyzing that a business is running and this like particular brand is really growing high on this particular region or whatever, so later you can start yourself. It's quite open. So is there anything that you are tying up with the main guy that you will not do that?
I didn't hear the full question. Is the question...
Would you then build a competing brand and shoot yourself in the foot?
So your question is, will we take the brand's recipes and build our own content?
Yeah.
He'd have no business.
Yeah, so look, for us, it's a platform play. Right? So we could have, at any point, built our own content. We have all the knowledge of what works, what doesn't. A key to our, us existing and existing and sustaining our growth is making sure that we're true to our ethics, which is being a purely neutral platform that simply takes your third-party brand, cooks it, delivers it. So we, at no point will we invest in brands, own brands. That doesn't sit with kind of our ethics.
Because why I asked this, because 11 years back, when we just passed out of our degree, like engineering, we had a company at that time, and that time in India, I was just like marketing and going in front of the people and saying that, see, put everything on internet so that we will work for you, and see, it will be an amazing e-commerce portal. So at that time, it was quite new. But whenever we go to these guys, like the entrepreneurs, they were asking, say, why we got to put it on internet? Because later you will understand our business style and you will start your own. So do you face the same thing now?
Yeah, look, it's a question that definitely a lot of businesses ask us in terms of how do you manage our IP and how do you make sure you're not going to steal what we do. And I think a couple of things are important here. One, we have a track record. While it's young, but it exists. Two, contractually, you're very well protected. But if really our intention is to take your very special recipe and replicate it, it probably costs us $1,000 more than what you pay your chef, and we probably have all your recipes. Right? So what we believe makes a brand, a successful brand, is not just the recipes, but more about your brand equity and your coverage and the product itself. So it's again, true to our core is not to create brands and to work with third party and to be a platform play.
And last question is that, see, you had put a lot of effort to build your company during your early stages. Okay, and now you have set up a lot of things, rules and regulations, right? So do you consider a startup who is having really like a good framework for his business as you had come across your life? So is there any consideration for you give for the startups, or it's just like you look for the big brands?
Look, again, it's no longer that I look or somebody looks within Kitopi. It's very much software driven. Our decisions are now to really eye out and look at for what is the best brands to get on board. Typically, it'll cost us and you a lot of money to get a startup at scale, to grow at scale. We do that, and we have great success there. But what we see is a better model for us is to get a brand that already has an audience and understands what's working, versus us investing in something that ends up with a branding on our platform. Typically, we recommend try yourself. When you have proven your MVP, come to us.
Thank you.
Hello, Mark. A question on the regulations in Dubai. It's very easy. Like you said, you just have to open a virtual kitchen and give it to you, and you have the license to sell the food. Some other countries, they don't give you that. You have to build out a full kitchen to get the license, which is Bahrain, which I already checked the rules and all. In Bahrain, you have to build a kitchen, so the capex will be spent. What do you do about it?
Again, the question is, you have to build a kitchen to own a virtual brand?
To own the brand. Like if you bring the Kitopi to Bahrain, you have 20 brands that you'll ship to Bahrain. You'll have to build 20 kitchens to get the registrations for them. Talabat will not list you unless you have a CR with the name on it.
CR would be Kitopi, but under a brand. Remember, your brand. Yeah, it's fine.
You can?
Yeah, you can. However, if you want to have like an X brand with a separate CR, you can. Right.
Yeah, so again, I think at a certain point, I should probably stop sharing how these things work. But if you guys have brands, don't worry, we're going to solve your problems and just plug in and it's all solved. So,
And for instance, Talabat, you have a restaurant A. It will be called Kitopi or it will be called A?
It will be the brand, but the CR is
They are like a franchise.
look, we can take this offline, but rest assured, we're coming to Bahrain and we're going to be able to onboard you. We have strong backing by the EDB and BDB, so we should be good.
Sorry, two quick questions on regulations. Number one, how do you deal with issues like food poisoning? And secondly, how do you deal with markets like in the US or in the UK where you would have this central kitchen and hundreds of drivers are coming to your location and you're having residents, for example, complaining that all the drivers are coming to you? How do you deal with that?
So look, on the food poisoning case or just any health and safety challenge, so obviously we know one of the founders is Chief Compliance Officer. Like, so his full-time job is to make sure that food safety and compliance is at the forefront of how we think of things. Keep in mind, I mean, we come from a manufacturing automation background, right? So we understand the importance of putting the highest levels of food safety and think of it from a manufacturing standpoint rather than just a typical kitchen. So all our kitchens are ISO 22000 certified, and we go the extra length to make sure that that's a big top, that's something we tackle really well. That coupled with, the right liability and insurance programs we have in place to make sure, if God forbid something happens, everyone's, our brands are safeguarded, etc. So we're probably the most audited facilities in the world. So we have our own internal audit team. We have third-party auditors, and every single brand on our platform is constantly auditing us. So that kind of three-way way of auditing helps a lot create these good checks and balances on a global level. And your second question was on drivers.
If you have a central kitchen above my apartment building in Zone 1 or in Paris or New York, and every day or every hour you have hundreds or thousands of deliveries, those are hundreds of bikes.
Yeah, got it. So look, I think that when we first launched, that wasn't one of the thoughts we had in terms of like, are we worried that we're disrupting the local councils or environment around us? And we did run into a couple of issues disrupting neighbors. I mean, we typically would do around 1,000 transactions per store, and that creates a lot of disruption to the environment. So one of the things we're building now in all our sites is driver waiting areas. Make sure that it's a good experience for drivers, but also a good experience for the neighbors. So it's something we're conscious of now, something we build into our platform, and make sure that we tackle that. That said, this is something that is here to stay. I think that buildings and councils are tackling this with us, and we're all trying to find a solution to make sure that you don't have just drivers waiting around. You have drivers come in, come out with the least disruption. In places in London, for example, they're banning motorbikes and they're using more electric-based vehicles or just bicycles, etc. So I think there's a component that we can control, which we are doing our part, but we don't own the last mile logistics, right? So we can't really control what drivers are doing outside our premises. So I think this is an ecosystem effort to really help solve for that.
Ask away.
Is there any financial advantage to
Look, the capex saving. Look, the capex saving is only a fifth of all your savings. So I think it's great that we're saving you capex, but the opex is actually a bigger part that we're saving you. So 4/5 of your burn to launch a brand will probably be on the opex side. So that's something where you don't have to worry about working with us. And typically, even if you're a brand that's doing 150, 200 transactions per site per day, we see that working with us is a better option, just because you would make a much better return versus working from your own site. Keep in mind, we have 30 brands on average per site, so we can get much more efficiencies gained versus owning, having a one brand site.
I mean, without getting into too much detail, just think about the concept of building a kitchen, or forget about building a kitchen, occupying a kitchen, someone else has built for you, let's say, even if you're running your own brand, and producing delivery out of a few of those to have a large area of coverage, versus an aggregator like Kitopi that essentially is filling 20, 30 brands per kitchen, and then being able to manage the capacity utilization so that you're able to execute at a peak capacity for the most part, right? I mean, obviously you have off times, but you have other things to do in those off times to fill the capacity utilization and fill productivity.
Yeah, so typically brands working with us, if you had a brand and you look at your own P&L and you factor in your food delivery P&L, the global industry norm is the very low single digit. What we see in the countries we operate in is most brands lose money on their food delivery. So it's the good part is you're not losing money more with us, but more importantly, even if you are making money, we're at least three times better off on a kitchen level working with us. But beyond that, beyond just from a percentage basis, you're better off. You also get that scale, right? So you're in a lot of sites very, very fast.
So how is the pricing? How much do you charge each restaurant? Sorry.
That's fine.
So we're moving towards a dynamic pricing model similar to what you get in the hotel and airline space. Currently, it's around 10 to 13% possibility free.
I have two questions for Mo. First, I wanted to touch up on something you said earlier, that you pivoted, or you switched up your idea into something else. At what point do you know whether, when to switch or when to continue with it? So do you have a minimum viable product? They advise startups to get to the market
Try? Is it on? You wanna maybe turn it off? You want this?
Test? Okay.
Yep. So the question is, did you pivot? I think the use of the word pivot is a big word. There was many micro pivots, but the overarching concept was he didn't pivot that. So maybe you can address.
So look, I think that there's kind of you don't repivot every day. You don't repivot. But I think there's a balance between knowing when something's not working and trialing something new versus being stubborn about it and saying, I think sometimes founders tend to be very stubborn. I guess ego kicks in that this is the right way and let's stick to it, and it ends up not working. So A/B testing is good. That's something that's worked for us. So if we want to trial something, trialing something in silo mode very fast, seeing if it works, and then using that model. But having a good co-founder is helpful, right? So, or maybe two co-founders is helpful. And what I've realized in both businesses now is having someone to challenge what my thoughts are and vice versa has been very helpful in deciding do we need to repivot? Is there something we need to do? And having a network of really good mentors and advisors and even good entrepreneurs who've grown businesses before will help challenge if this is the right time to look at a repivot or not. But we've done maybe 30 small repivots and one major repivot, and That's helped us a lot. I think that really knowing how to change gear while growing very fast is very important.
Operations. So you have, let's say, 30 brands in your kitchen, and then 30 brands means 30 menus, and let's say 15 or 20 items per menu. How do you manage it operationally? So like, would one part of the kitchen handle the salads or the fresh produce? Would another part handle like baking, frying? How does, because
So next time you're in any of the countries we operate in, I'll welcome you to a tour. But yeah, so it depends on the size of space. We have different formats. We've tried actually, we have a whole team now working on a evolution of how we operate into a much more efficient way. So we constantly are improving the way we operate our kitchens. The simple version is it's a shared resource game. So everything is shared, and that's how we gain our efficiency. So you have to really strike the balance between sharing everything, but yet not contaminating brands. So that's me being vague about it.
And maybe just in addition to that, I think the better word to use in that case is iterations, right? So from our first conversation of understanding the sheer size of what Mo wanted to do, right? Given that people are dining in less and eating out far more, that's the sort of macro play, and that restaurants, the cost of doing business as a restaurant is increasing every year, with rents going through the roof and payroll going up, with just inflation and raw materials going through the roof. And so an aggregated model has to make sense. Now, so that's the sort of macro. Now, how do you take that and do, we actually did, yeah, sure. But here's what's funny is we did a panel last year. We have an annual investor conference every year in November. And we actually did a panel, Mo and I, and the panel was about micro pivots, so iterations. And we literally spent 45 minutes talking about how when we first got over the macro, which I've just described right now, and you clearly see, okay, this could be massive. Now, how do you take this could be massive to how do I solve for this as a business? How do I get over the CapEx issue? And again, there wasn't just one solution for CapEx. There is other people will build it, and you could see, you're asking him questions. I think one of the things I think that I'd like to convey through this dialogue to you all in the room is this micro iteration concept of how he's thinking about these things anyway, let alone surrounding himself with smart people, whether they're friends, investors, mentors, advisors, doesn't matter. They're all the same. They're people who want him to succeed, whether we have a vested interest in him succeeding because we put money down and that's our job, or he's a buddy, or I'm a mentor, or I'm an advisor, or whatever, it doesn't matter. Ultimately, he surrounds himself, and I think that's one of the messages here, with people who genuinely care about you, genuinely can add value in the thinking process, even if it doesn't have to agree with what he thinks all the time. On the contrary, he needs that someone to challenge him. But then to think through, I can set up an off-balance sheet fund. I can become solutions, and many of them, and then you have to try many of these through conversations and make some of them reality. And maybe in one kitchen you try different things, and so getting over the whole CapEx issue with like 4 different ways of doing it, and then trying them out, and testing them out with people. It's not easy, and balancing.
And then like sushi, and then shawarma.
Yeah, not only that, it's just getting over do you build the kitchen? Do I build the kitchen? Do we share the kitchen? Do we have cloud kitchen guys building them? Are they building them in the right place? Do I go and try hotels? Maybe hotels have a lot of kitchen capacity that is unused and is high quality. We went through all of these iterations, right? Until we got to where we are today. And by the way, he will go through another 20 iterations, in the next 12 months, not only on this one item, on all the other items we're talking about. You talk about brands, when one of the first things we asked Mo was, are you going to go to a restaurant and tell them to let you cook their food and deliver it to people? Interesting. I wonder how easy a pitch that's going to be. And in the beginning, it was difficult. And then you get a few brands that, you know, trust you and say, what do I have to lose? Or whatever their rationale. Then they try you and they think, ooh, this is pretty cool. He's right. What he said to me, what the efficiencies and the payroll, he's delivered. And then, hang on. And as he grows, I start scaling with him. I mean, there are brands that Kitopi has taken on that were doing 100 orders a day that are doing 2,000 orders a day. I mean, and that's just locally. Now they're entering markets, geographies they would never have dreamt of being in these global markets. And as this business continues to grow, they grow with him. And it's just a wonderful, symbiotic, accretive relationship across the board. But again, I guess maybe you can talk about, you know, ideation and iteration, whether it's on that or on the technology stack or on procurement or on which type of brands and how to solve for the algorithm to tell you, so you get out of the decision making and the technology tells you these are the brands we want to work with. There's so many things when you talk about execution that you have to do flawlessly in order to build and in order to build a global business feeding millions of people across the globe, growing at, you know, 700% annualized growth.
So look, the simple kind of summary of all this is really hiring people and having, one, great co-founders, and two, hiring people that are smarter than you. And you know, we have a phenomenal leadership team, probably one of the best leadership team, you know, to be confident about it. One of the strongest leadership teams you'll find in the region for a young company. And I think and each one of them is smarter than me. And that's how I spend my time, making sure that people I hire are better than me. And if you can...
Through the venture capital? Or?
Look, I think networking and having a network of people around you who are going to recommend people and advise people is important, but you're constantly selling. Right? So if you sit with me for too long, I'll probably convince you to work for me in the next 1 hour. Right? So I think that you need to constantly be selling, and my sales pitch is, you know, less to brands because I have people doing that, but more to people. And I think one of the things we need to do more of is just really hire a great team. Look at Kareem. I think Kareem managed to grow really fast because they had a phenomenal team. And learning from my last business, knowing that, you know, it took me 4 years to figure out that, you know, paying very little salary and, you know, you get not the best people is something very important, and making sure that the second I hired a really stellar team, it helped me really grow the business and eventually sell it. So that's the key message here, is hiring people who are going to challenge you and help you ideate efficiently.
Just one more question for Danny. So I recall you said when you met Mohamed for the first time and the impression he made. As an investor, what is it really that you look for? Is it an empirical or non-empirical based decision? So would you look for success, or do you sell into the idea, or is it the personality? Because it's all just, there's no kind of formula, right? It's all a gut kind of instinct, or I don't know.
So
you get what I'm...
No, I get you, and I'm smiling
what
because...
do you see, how did you see, or how did you envision how far this would have gone from the first time that you met him?
Kitopi. So let me answer your question generically first, and then we'll talk about Kitopi. So, and again, I'm smiling because it's a topic that we constantly debate internally as to what we look for, and, you know, why Kitopi is what it is today, and go back and actually analyze. We analyze the failures, we write post-mortems, we also analyze to death the successful ones to try and learn from it. You mentioned the word gut. About, I don't know, 10, 15 years ago, quite a while back, I used to beat myself up when I was a tech entrepreneur because I used to find myself hiring from my gut. And so I read, I don't know, 10 books from the best, you know, from Jack Welch to the best HR practitioners to understand, to really, I wanted to hire better. And then I started, you know, building all these complex spreadsheets and making everyone that would interview them with the same type of questions to see if we could pick out anomalies. And, you know, I got a little bit too scientific until one day I read an article that I think was written in the Harvard Business Review. Again, this is way back when. And the article basically said that the gut is actually extremely high-speed recall into your database, the brain, going through all of your experiences very, very quickly and retrieving via your gut a response, right? And it's actually okay, right, to make decisions based on gut, because it's not just, oh, here's what I feel like today. It is actually going on vast amounts of high-speed neurons. And it's processing. It's going into the database and it's running the query and coming up with a, yeah, we should do this. Yeah, so I guess what I'm trying to say is when I read that article, and I'm simplifying it, it actually gave data. They took hundreds of CEOs of massive companies in the US and Fortune 500 companies. Imagine they take me out, put me in Mo's job, take Mo out, put Mo in my job. We do very different things, right? And to see whether Danny could run Kitopi and Mo could run Beko, and guess what? The results were disastrous. And the reason that they were disastrous is because his gut was very specific to what he does, and in his domain and his business, so was mine. So you took out my gut. You took out my gut essentially, and it affected my decision making. And you know, those CEOs in that controlled experiment, and it was a big experiment, made terrible decisions and destroyed value. So I guess what I'm trying to say is, I'm actually okay with gut. But what do we look for? I think we're trying to bring out in this conversation to all of you what we look for. We look for people who are incredibly ambitious, right? They really want to change the world. You can quantify that, but let's not quantify it at this stage. People who are incredibly innovative, which means they don't just want to go copy another model. They actually see a massive problem and think, oh my God, this is a massive problem and it's currently being done in a terrible way. I can do this much better and I can do it 10 times better, right? It's difficult to quantify, but it has to be transformational. It can't be incremental. Otherwise, we have no interest. So we look for things that are really transformational. We look for exceptional founders who are humble enough to know that they can't be exceptional at everything and they have to bring in amazing people and pay them extremely well. We're constantly selling. We're both constantly selling. We're selling investors, we're selling people to join the team, we're selling people to invest in, and the same thing with him. So you need, to a certain extent, strong salesmanship. And by the way, that doesn't mean you have to be like me, a big extrovert. You can be quite the introvert and be profoundly effective and come across with incredible conviction in what you're thinking and how you convey that, and really sell people by being very, very quiet. I'm actually reading a book called Quiet, about quiet people and how they can be as effective. Are you the introvert? Yeah, it's a super book. I'm actually halfway through it, but I'm loving it. So what do we look for? So beyond things that are white spaces, things that are transformational, right? These guys are reshaping an entire category across the globe. They may fail, I think highly unlikely. But you know what? If they succeed, it's a super, super massive outcome. And you know what's really, really cool for us living in the Middle East, looking at people building global businesses, is this is one of the few that is actually exporting business model innovation, right? Really in a white space to the world. And that's so exciting on many, many reasons, many, many fronts. Don't know if does that answer your question? It's a very, very long topic, let's put it that way. I mean, I'm trying to keep it high level. We also look for people who are incredibly curious, right? And keep asking themselves, why are things the way they are? And they don't accept status quo, and they constantly want to find better ways of doing things and challenging the norms and just being incredibly different. We should celebrate people being very different. Most people want to be like everybody else, myself included, by the way. So, but it's a very, very difficult thing to want to find.
I have the mic, so I guess. A couple of questions for Mohamed. The first one is, as you take sort of restaurants cross-border, given your offering and your cross-border platform. Who loads those restaurants or those brands onto the aggregators like the Uber Eats, Just Eats, and Deliveroo's? And second question to you is, do you see value in also owning or partnering on the last mile like Deliveroo, or is it just a distraction for you?
So we own the relationship, or we are forced to own the relationship with the aggregators, mainly from a regulation, licensing, ease of doing business perspective, but it's a three-way discussion, right? So brands are very much involved in these discussions we have with the aggregators to list them, but we're the direct owners of that relationship. And on the second question, we don't do aggregation of orders. So you would not go to a Kitopi.com website and place an order. We are, from a delivery perspective, we work exclusively with aggregators to source demand. So we work with the likes of Kalamata and Deliveroo and all of them. And we think this partnership really works where they own the demand side and we own the supply side. We see it to be relatively commoditized, and so given that it's, we think that focusing on our core business, which is the kitchen, is probably a better use of our time and money than working on a commoditized space.
My question is for you, do you work as an advisor to your client? Like, let's say your clients are struggling financially or in terms of their menus, or even like on advising them to go to new markets.
Yeah.
Do you work with them on that aspect? Or?
Yeah. So we thought initially that we wouldn't need to, but it turns out that taking a local brand globally is actually quite a challenge. So we definitely help a lot on the customer acquisition in terms of what's working, what's not working. We help on menu engineering. So what we don't do is we do not do product development. We don't actually action marketing, but we can definitely advise a lot on the different ways to optimize your menu, different ways to acquire customers more efficiently, building just in general a much better brand. So that's something where, because obviously the outcome is a win-win for both parties. Yeah. Just conscious of time. Cool.
Okay.
Well, look, if I guess I pretty much do not like to. I'm an anti-panel person, so I rarely do them. We love being in Bahrain. I think the EDB and BDB and Ideation's team have been very helpful in helping us understand Bahrain and getting into Bahrain. So we're very passionate about saying we will be entering Bahrain soon. But if anyone has any questions or anyone is looking to join the platform, even if you are a startup, we'll be very much happy to facilitate it. And if you are building an idea and just need help on, how did we fundraise and how did we do, obviously and that's kind of the purpose why I came, is to, really, I wish I had someone who helped me when I first launched. So happy to do that as well. And so feel free to reach out at any time. And if you're in any of the cities we're in, or particularly in Dubai where I reside, obviously please reach out. We'd love to meet one-to-one.
And I'm doing a workshop next Sunday the 13th here, same time, I believe. So it's about fundraising and what we look for, more specifically to answer your question. Then we can go down very deep. So please come. Let's have some fun. Thank you, everyone.
Thank you.